Hello, everybody. This is Randy Wootton, CEO of Maxio, and your host of SaaS Expert Voices, where we bring the experts in SaaS to you to talk about what's going on today and what's unfolding tomorrow. With me today, I'm delighted to have Chris Morgan, who's calling in from Nashville. He's CEO of LBMC and has an incredible background in accounting, finance, client advisory services, which we'll talk about. Uh, Really interesting, Chris, background. Starting out of college, you joined W Squared, spent 11 years there. And
Yep.
that's rare to have that happen. One person stay at one company, got acquired by LBMC, and then has been CEO for the last 3 years.
Yep. And we've been with LBMC for about 7 years now. So yeah, it's been a great ride. Um, Long story short, I did an internship in audit when I was in college at E&Y for 3 months, and that was all I needed to know. That I didn't want to go down the traditional kind of CPA path. So very fortunate that I kind of landed this job, and it's been a great fit, and I really enjoy the client side of things, but really the industry and seeing a lot of different industries over the course of my career has been great experience.
That's great. We'll dig in a little bit of that in terms of what LBMC focuses on today and how you've seen the evolution of the role of the CFO, some of the recommendations, lessons learned that you have, and then maybe we'll get into the conversation about CEOs because certainly congratulations on all your success and always love talking to people, sharing the misery.
Yeah.
And then we'll go to the speed round. So with that, Chris, maybe get a little bit more background on LBMC. We know each other because we have customers of both LBMC and Maxio, and your primary focus is on Sage Intact, but you have a broad swath of verticals that you support. Can you give us a little bit of context and how the business is currently structured or divided and what you're seeing in the future for LBMC?
Yeah, so LBMC was a traditional, audit tax CPA firm. Started back in the '80s, and then just over the years, they've added different entities, different service lines, if you will. So there's HR payroll, there's the outsourced accounting group. They've got an advisory services. They've got a technology group, and they've got some other groups as well. And so, really, they've just been looking to be the front line of supporting all things that businesses need. My group specifically, W Squared, focuses on outsourced accounting. So we're a Sage Intact accounting partner, and we're providing basically the people, the processes, and the systems. And from the people standpoint, it's APAR all the way up to controller CFO level services. We can implement Sage Intact. We use Bill. We use Maxio, Divi, Ramp, Expensify. Basically a really solid tech stack that you would want for really any size organization, especially as they grow in sophistication. And then we just know exactly how an accounting department should look and feel. So we bring those best practices to all our clients. There's some nuances and some tweaks based on the client or the industry, but by and large, accounting is accounting, and really, I would say 90% of what we apply to one client just about applies to every client. So it's really nice. We've kind of got that world machine built, and we just replicate that with each client that comes through.
That's great. And you're doing great. 500 plus customers. When you think about your target, we were chatting in our pre-brief that you're primarily focused on this $3 to $5 million ARR. Why? But you can support up to $25 to $35 million. Maybe talk about why is it that you look at the 3 million and then when they roll off or that your relationship shifts at the 5 million and then maybe at the 20 million. What are those inflection points that CEOs or investors are looking for from your services?
Yeah, so I would say on the smaller side of it is kind of that inflection point where there's now enough complexity, or there's been complexity where they're having difficulty keeping track of what they should be billing. They're probably most of the ones that we see up to that point, zero up to the 3 to 5 million, are really being cash basis. So you're seeing a lot of lumpiness within the financials. And they now need to get to a point where they're really looking at this from an accrual standpoint, and they're, getting the waterfalls instituted, and more professionalism and sophistication. Um, Really, what really comes down to the inflection point is really what I would say more transaction volume from the number of customers, the number of invoices that we're sending. If you have 500 plus customers, but you're invoicing annually versus monthly, that's a different animal. But if they're all monthly or they're all quarterly or there's a wide spectrum along there, that's really where it tends to be like, okay, do you really need people that are fully dedicated to it, or do you just need to find better systems? So um, we tend to try and go the better system standpoint. And actually, since you and I last talked a couple of months ago, we actually picked up a client that's in the 15 million ARR space, and they're heavy in acquisition. So we're basically coming in. I would say, whereas modified cache at best, there was a lot of inconsistencies. So we're having to kind of recreate some of the waterfalls, validate some data that also coincided with private equity get involved, getting through their first audit. So it's been a pretty big chunk to bite off at this beginning. But once we get it cleaned up, like it'll run pretty well from that standpoint on. So I think it's something that we can hang on to, close to that 25, $30 million range and probably higher. It's just getting those processes in place and having, a great client relationship where, they understand that we're coming in as the experts and they're giving us a lot of autonomy to come in and fix a lot of things.
That's great. And I think that's what we find is often a founder, at least in B2B tech, which is where we focus our ICP and we focus our energies. It's often a technologist, an engineer that's founded it. They
Yeah.
will often have their uncle, who's their bookkeeper, doing cash accounting, managing it with a checkbook. And then when they take professional money, seed, Series A,
Yeah.
investors come in and say, "Okay, hold on a second. We need a little bit more governance, compliance, and uh, predictability in terms of the reports you're going to be producing." And so it sounds like that 3 to 5 million zone is consistent where we see it as well, where they're bringing on an outsourced partner, a CPA firm or a fractional CFO. You have had some great success with companies, you staying with them all the way going public. I think it was one SaaS company so far that's exited. You've worked with multiple healthcare companies. So help
Yeah.
me understand that inflection point. So at 35 million, they probably have a CFO on staff. They have some finance people that are doing some billing and APAR. How do you, or is it just so different for each of them that there's no consistent way of thinking about the services that you offer when there's a CFO in place? How do you think
Yeah,
about that relationship?
it really just differs, from client to client. I'm CFO of 3 SaaS clients today, but if there's a CFO in place, like my team is, they're supporting them. There's another SaaS company that we've had that I've kind of stepped in and helped from time to time in the CFO spot when there has been a gap or they've needed somebody. But really, since going back all the way to 2009 when they started as a SaaS company, my team has been involved helping on the front line, and there's either been a VP of finance or a CFO they're supporting, and that's totally fine as well. I think that client in particular needed to do a lot more capital raises. They needed a little bit more of a handhold through board meetings and just wanted somebody that was there full time to kind of more from their comfort level because they didn't have anybody that had that expertise. Um, and they weren't really getting that a lot from their private equity group either from, a level that they were comfortable with. And I think part of it was, they didn't want it to be obvious that they didn't have that expertise in house. So they wanted to kind of solve that for them. So it really just comes down to, individual kind of need and feeling like the structure and support that they ultimately want. But there really isn't one rule, across the board with all our clients. I think, if you've got something in place and it's working and everybody's getting the information that they want and the business is heading in the right way, whether we're involved or whether we're involved in just a fractional level, even if it's not the CFO spot, I'm always a proponent of don't break it if it's working.
But in some ways, and this is maybe a segue to the next set of conversations around lessons learned and recommendations, you've seen a lot in your years.
Yeah.
I think there's probably, having sat on a couple of boards and worked with a bunch of early stage folks, they don't even know what the right questions to ask are. And so when you think about asking questions that are specific to your industry, for B2B SaaS, what are the things that you find when you're working with those early stage founders where you're like, look, you really need to be thinking about this in terms of how you set up your financial operations and think about representing your business so that you can do capital raises?
Yeah, I think the biggest thing is really most of the time what I see is cash basis. And you hear it all the time, right? Cash is king, and that is certainly the case. But if you don't understand what customers are rolling off, and you can't really say what revenue your customers are bringing in from an MRR, and you don't have the waterfall, like just some of the basics that you need to have those waterfalls to really be able to run standard metrics. um to ultimately get to MRR and ARR, then you're going to be found out pretty quickly when you're talking to somebody about potentially raising money, or potentially trying to sell. And the reality is you're going to take a lot of black eyes through a diligence process if you don't take the time to kind of figure that out on the front end. And right, that's a less stressful thing to kind of do it at your pace, on the front end, than to kind of go through that pain either through raising capital or trying to sell.
Yeah, we were talking. I reminded of this quote from a national law firm who says the number one deal killer, the thing that kills deals, is accounting errors. Which you're
Yeah,
just like, really? And it
yeah,
comes down to, I think it's primarily around for B2B SaaS is revenue recognition and reporting,
yeah,
and having confidence in what you describe as a waterfall. It's where's everybody, every customer, where are they,
yeah,
how have you recognized that revenue for the subscription, for the professional services? When do you collect the cash? But that then ties into, of those set of customers, what's your gross retention going to be,
yeah,
and what has it been historically, and then net retention? All of those key metrics that investors investing in, is they're investing in revenue streams.
yeah,
And if you don't have the accounting in place, then it can be just horrific. I remember I was chief strategy officer at a company. I sold a company which actually had SaaS Optics, which is legacy Maxio, and it made the acquisition go pretty well. We
yeah,
went into, I was chief strategy. We did a bunch of M&A, and I remember having one company was 10x the size of this other company. They were on SaaS Optics, and we spent like 1/10 the amount of time and dollars on forensic accounting.
yeah,
So for the other company, we spent 10x the time because they had contracts basically in filing cabinets, and we were trying to figure out what was going on,
yeah,
and it almost killed the deal. And I tell you, the amount of time as the acquirer and energy we had to spend on due diligence, forensic accounting, it made it like, you're like, really, we're going to spend this much money on the deal dynamic versus
yeah.
the acquisition. But I think, to your point, if you're not taking care of that, if you're not building your back office, you obviously want to focus on your go to market tech and have that sorted out, drive revenue. But you
Yeah.
also need this investment in tech and process on the back end to help support running your operations and then future growth.
Yeah, it's going to catch up with you at one point, right? And accounting is always the afterthought, and on some level, right, we all get it. Obviously, having a product and then growing the business are two key things, but you really also need to understand how you're performing, how much you're growing. Are you just replacing customers that you're losing, and you're not growing as incrementally as you probably should? um, all of those things, and they're all the things that whenever you go through due diligence, whether it's a sale or just an investment, that private equity or a buyer is going to pick apart. So and I've been on both sides of it, where we're coming in and kind of cleaning up what is a mess because private equity's gotten involved. And you know it's a lift because you're trying to get a lot of it done in a very short period of time,
Yeah,
as
yeah,
opposed to, like, get out in front of it. If you think you're going to do something, then it's probably time to get somebody involved. And I'd be looking at doing that 12 months out, right? That way you kind of have some consistency as well, because ultimately, if you get somebody involved to clean it up, they're going to have to draw a line in the sand, okay, and go, okay, we're going to get it cleaned up to this point on what it really should be. And then month over month, you're going to see some trending and some consistency. Um,
yeah.
and so, uh, in any SaaS company, you should be able to see kind of that, starting to see that hockey stick growth. And so that's a massive red flag if you're seeing all these peaks and valleys on the face of the financials month to month.
Yeah, I just, gosh, we're backed by effectively a PE firm battery. which brought two companies together, SaaS Optics and Chargify. And part of the
Yeah.
reason I wanted to join this company because they wanted to do ongoing M&A. And we've looked at a bunch of deals over the last 2 years I've been here. We were looking at one just recently. It's fascinating you say that about the churn and the net ARR,
Yeah.
because they have pretty good growth on a quarterly basis in terms of new ARR, but their churn, I mean, the gross retention is in the 70s. And when you look at the
Oh, wow.
net ARR add per quarter, it's not that much. And so I do think this understanding of churn by product, by segment. And so now we're going in, we're double clicking down and looking at the different segments and saying, oh, well, this segment, if we looked here, that's actually one we would be okay with discounting in what we will pay because we think it's going to go away. And these other ones we're more interested in. But I do think that waterfall chart that then you're able to do that segment based analysis really helps you, one, run your business better,
Yeah.
but also as we're talking with these different companies, where that's the thing we talk about is the ARR. Where's it coming from? What are they adding? What's happening in terms of new bookings versus expansion? What's happening in lost as well as contraction? So all ties into that core set of reports.
Yeah, and I think if you're not seeing that information right in a timely fashion and in a form that can be digestible, you're not looking at that. And if you are, it's probably already happened 2 or 3 months ago, and you're like, oh, I wonder what
Yeah.
happened here, right? So there are things that you need to be looking at, certainly at a minimum on a monthly basis, so that you're kind of keeping a close gauge on that for sure.
Great. And before we talk about the changing skill set of modern CFOs, in our pre-brief, we also talked about order to cash being one of the lessons learned that you find. And you introduced your company as one who focuses on people who are often just doing cash accounting.
Yeah.
Talk a little bit about the order to cash cycle. And then we talked a little bit about revenue leakage and how that plays out with different types of pricing models.
Yeah, I think we see it a lot. Certainly, you're seeing this kind of hybrid. I wouldn't say more often than not, but just whenever there is consumption and variability in the billing, um, if you're just kind of focusing on cash, I'm sure there's revenue that's being left on the table, right? So there's also this: how should we really be capturing things on kind of a consumption model? And on the tiered pricing, they might be like, "Hey, we're going to give you like 100 submissions over a 12-month period, and then if you go over, we're going to charge you, $3 an extra submission, right?" And if you're keeping an eye on that, are you actually booking it monthly on an accrual basis and making the adjustments? Or, there's a lot of different ways and nuances that you should look at it. And I wouldn't necessarily say there's one way right over the other, but you really should be looking at it and doing something consistently. And I think if you're just looking at it from a cash basis standpoint and then doing true ups, I don't think you're doing it consistently, nor are you really understanding, okay, what should I really be pricing it for the next year, right? Because they're probably way over, they could be way over on the tiers, and you need to really be thinking about, okay, we should be pricing this differently. So, we get more kind of that recurring revenue on the front end, and then resetting kind of what these tier levels look like. Um, we again, it's kind of going back to the cash basis. I think when you get into different revenue streams, different products, the different pricing, within that consumption model, things start to get really complicated and can be hard to keep up with. And if you don't have somebody that really understands the SaaS industry, then you're going to be in a real bind.
Yeah, and I think with usage or consumption-based models in particular, it gets, as to your point, gets crazy complex.
Yeah,
And then you have this whole revenue recognition,
yeah,
right? Do you do it on 1 month times 12? Do you do the trailing 12 months for usage? Do you do
yeah.
T3 times 4? We actually have moved on our business to trailing 3 months times 4 because we
Okay,
were getting a lot of volatility on our usage on a monthly basis, 1 month times 12. We were like, well, what's going on?
yeah,
Because they would go up and down. And so try to smooth it out. But if you look back just over the full 12 months, so trailing 12, it
yeah,
wasn't representing or capturing the growth. And so it is very different than you buy a seat once a year, is you have this usage playing out over, to your point, number of subscriptions, or people who might think of like the old data plans with cell phones, right? Like you're
that's right.
consuming a certain widget.
Yeah,
And I'm getting pinged by my cable provider in my house in Haley because we're not on an unlimited plan, and they keep sending me notes like, "Hey, you're about to exceed your usage. Do you want to upgrade to the next plan?" But it's that same mentality applied to B2B SaaS with the next level of complexity. Is B2B SaaS is hooked on ARR, or yeah, and recognizing that revenue in that way as ARR, annual recurring revenue. And so there's some nuances and there's some judgment. And to your point, like having a partner who knows that, who then sits with you during the board meetings and then also during the audit, right? So
Yeah,
you pass the
yeah,
audit, makes a
and
big
I think
difference.
it's big difference, and I think it's really consistency, right? And to your point, right? Not all businesses are the same, and you really want to have somebody who's going to take the time and really kind of dive in and understand the business and the nuances around it, so they can kind of better guide you on how all that should be captured and reported.
Awesome. All right. Well, let's shift to the changing skill set of modern CFOs. You obviously you've been a CFO, you're a CEO, you've met a bunch of CFOs in your career to date, 20-ish years. What have you seen have been the biggest changes in the office of the CFO and the types of skills that modern CFOs need to be embracing and developing?
Yeah, I think the biggest thing that we're probably seeing a lot is kind of two pronged. Is there's I would say since COVID, there's been a mass exodus in the profession, and so we're starting to see people that are moving into these roles that are either first time doing it or don't have a lot of experience um, in that role, and they tend to be more on the financial analyst kind of capital raise budget modeling standpoint. And I think that's okay as long as,
Versus more the controller,
yep,
core accounting, what you find often CFOs will come out of that. Versus to your finance side is, I think of those as like the people coming out of investment banking, or they may be
exactly.
the
Yep.
the analyst at the firm that drops in the CFO role. So just sorry for interrupting, but on
No,
two
you're good.
questions, why do you think there's been a mass exodus of people?
I think that accounting's always been very detailed oriented. You've really got to get in the weeds. You've got to make sure you know the numbers, understand the numbers. And so I think, a lot of people just have gotten fatigued from it. And it's also impacting at the bottom end of the profession. We're always actively recruiting. We're growing a lot, just our individual firm, and we've seen enrollments go down 50% at universities for accounting. So um, I think it's all these things tend to be cyclical, but right now there's just people just don't have the appetite to do it. I mean, I think that's just the bottom line. You're seeing less. Where I think when I was getting into accounting and I very much lucked out landed at the company that I did. For me, it was always like it's job security, right? Accountants are
Right.
the last people to get fired. I know I'm always going to have a job. There's always going to be a need for accountants, and I think people just want to do something else where there is this kind of instant gratification. You're not kind of in the weeds and the details as much as you are in accounting, and so you're seeing people kind of fall into different things. And I think from the CFO standpoint, like a lot of my controllers as well, or even today, like really advising CFOs more than we traditionally have because they don't have that accounting expertise. And I think it's okay, right? As long as you have that in your team. That if you don't, you're probably you're gonna get found out and you're gonna get in some hot water at some point, especially if you're going through audits, um, because there's still that accounting acumen that you need to make sure that things are getting accounted for correctly, especially if
Yeah.
you're doing it on an accrual basis.
I think that's a really interesting point. I'll tell you, I actually had to let go of a CFO at one of the companies I was at because they came out of that finance, investment, banking type of background. And I just simply asked, show me the cash.
Yeah,
And 30 days later was still struggling to give me my 13-week cash forecast. And I was like, I can't not have the controller oriented CFO and role as a starting point. I've certainly loved having the person with the FP&A chops who can do the modeling,
yeah,
but if you can't get the three financial statements sorted out and tell me what's happening with cash, especially in a we were talking a little bit earlier about in the order to cash, but the whole understand your cash flow management, and when your burn is, and when you're going to need your zero cash date, and when you're going to need
Yeah.
more money. And in many ways, as a CEO with your CFO, that's one of the top things you got to focus on is management of investments, and when you're going to go out for money and how much you're going to take. And it all starts with cash. And I think when I have a CFO now who came out of a PE background, has been multiple times CFO, and we're just totally aligned on cash management is the primary, the
Yeah.
primary thing.
Yeah, you've got to do the budget and modeling for sure, right? But I mean, the books need to be closed every month. There needs to be an accounting discipline and a financial discipline around everything being reconciled every month, right?
Yeah.
And having those balance sheet recs, the cash runway, understanding what the cash burn is, and being able to forecast that out. And I think even the accountants do that. It doesn't have to be right a financial analyst to that point, because they're in there reconciling cash. They have the schedules, they understand deferred revenue, they understand prepaids, right? So they understand and can explain why, okay, we only burnt 200,000 this month, but we burnt 400,000 this month. What happened? Well, we had two prepaid renewals that were 100K. That's exactly what happened, right? So we deal with that all the time. And, we have a really great group of accountants, and we're not just bookkeepers. There's not everybody's necessarily CPAs, but they're all degreed accountants. And so they understand that expectation, not only the month end close piece, but the cash burn, the cash runway. And, we say we're audit due diligence ready at any point in time. And I think that's important. I think private equity has always been really active. It obviously becomes a little bit more cyclical, but it seems like there's a lot of activity all the time. And so I think there's a lot of value to being ready for that at any point in time.
That's great. One of the things we talked about, which is this, uh, especially these folks that don't come with the controller without the controller background, what do they need to be focused on? You were talking about the accounting acumen, and what specifically I think you were calling out, which is so helpful, is you've got to understand how things were booked, and when you're managing the month end close,
Yep.
and then be able to provide judgment in terms of, is there an issue? If there's an issue, where do you look?
Yep.
Having recommendations with regards to how to fix it, and then be coming to the CEO before the board meeting to provide some advice and insights in terms of what you could do here, putting it into context in month over month, quarter over quarter, year over year, by segment, by product, by region. Like there's a lot of like curiosity and motivation. You got to have the motivation to dig and explore, and have a point of view. And what you don't want to do is walk into a board meeting as a CEO and have a CFO next to you, and have the analysts on the other side who are looking at the same numbers, who they're whip smart Excel jocks, are going to come in and beat you up and take you to, I call it math camp,
Yep.
without you already having a point of view in terms of, well, what happened? Why did it happen? What are the set of things we can put in place? It could be pricing, it could be packaging, it could be churn, et cetera.
Yep.
And it sounds like that was one of the things when you talked about the changing skill set of the modern CFO, is that in your team in particular, but you're finding that there's this intense demand for data across all functions. And so the CFO is at the intersection of all this information. How do you, what do you recommend CFOs do when they're in the B2B SaaS where we have all this data? I mean, that's the advantage and disadvantage. You have so much data, but it's hard to make sense of the data. What are your recommendations for how to manage that and be successful?
Yeah. And I think, you know, the accounting and finance function, right? Anything that smells, looks, feels accounting, right? Ends up falling into accounting, whether it's a payroll HR thing or something else. So it's a really tough balance, and I think the best thing is just having a solid team around you, no matter what that looks like. Because if you can get into a cadence of going through the data and getting it into something that's digestible, and everybody understands, and I think whoever, whether it's department leads, the ELT, or the board, right, whatever different variations of that is from a reporting standpoint, like have those conversations, figure out what it is that everybody wants to see, and get that built in a regular cadence, whether that's weekly for some or monthly for others or quarterly for others, right, if it's quarterly board meetings. um, And typically, what I would say, what I've been trying to do is that a lot of the times it's the same information. There's maybe somebody needs something else, or some information is sensitive, so you're going a level deeper. But build kind of something that's repeatable, and then get whatever templates it is, and then populate that same information. Because I think the big thing is digestible information and consistency in what they're seeing. Um, People, are like, what am I looking at now? Right? People are like, okay, this looks different than what I saw before. What's going on here? Um, and you should be able to do that in accounting, right? Whether it's doing something in Excel, building reports within an accounting system, which I would always recommend is the better way to go, or within Maxio, whatever you're pulling out, or other third party, system. There's always some standard reports that you can either build, or produce and generate, on whatever cadence you need to.
Yeah, there was a lot there, and I think just that understanding of moving. We described it before as from the back office to the front office. How do you become a strategic partner, not just
Yeah.
for the CEO but the ELT? And at the end of the month, I think the thing that I really like is when a CFO or the FP&A person working in the office of the finance is able to provide budget to actuals and
Yeah.
say, hey, at the end of the month, this is what we thought we were going to spend along these different dimensions. Mostly it's like marketing dollars because there's a lot of variability, but even on your hosting costs, et cetera, budget to actuals. And then the things that are most controllable are dollars for people and T&E, et cetera. But I do think, to your point, the other really important capability of the finance team is to have consistent representation of the numbers. So I
Yeah.
know one of the big challenges when you go to investors, if you miscategorize something or you had your ARR not appropriately recognized, those Excel jocks will be there and they'll say, hey, well, last quarter you went through and said Q1 gross retention was X, 88%. Now you're coming in saying it's 84% or 80, 83%. What happened? And
Yeah.
so then you go to Bath Camp and you have to explain it and show all these things. So the
Yeah.
more you have a system that you can trust and a reliable process to close. The other thing I would say, Chris, we didn't chat about this, is I do think, again, I'd be happy if everybody in the world bought Maxio, but the difference between having a tool that allows you to get access to the information early in the month around ARR
Yeah.
versus having to wait until you close the books, which is, for you guys, you maybe go faster than most. 8 to 10 business days is what I hear. My CFO says tries to get done in 6 days. Most companies are kind of in that 10 days, but then you only have 2 weeks and you're working with the spreadsheets. And so I think that you're going to close the books, you're going to figure out the cash. And that's the number one thing, as we said it, but it's really that insights that you get by
Yeah.
looking at the ARR and what's happening by product, by segment, by region, where
Yeah.
you start to understand, do you have a working business or are you struggling in certain areas? And that's where someone like you and your team is really able to provide value to the technical CEO who doesn't even know how, not because of any criticism, but just that's not what they're trained in. They
Right.
don't know how to think about the business through that lens.
Yeah. And I think, the waterfalls and the revenue pieces, always the hyper focus, right, for SaaS companies.
Yeah.
And as it should be. And really, the rest of it is, really not that complicated, if you get that piece right. Um, and so, depend on when you're doing the billing, and if you're doing it at the beginning of the month, then that's usually the part that we jump on pretty quickly, and try and get that figured out and make sure, we're dotting our I's, crossing our T's, making sure if something fell off, did it really fall off and it didn't just get missed? Was there really upsell on this one customer, things like that? Because they're the little things that matter, and that's the visibility that everybody wants to see. Is the company growing? Are they cross selling? Are they retaining their customers? Things like that.
Yeah. And the one piece of advice I'd give as a English major uh, is CFOs being able to translate the data into pictures, compelling pictures in terms of trends or stacked bars or,
Yeah.
a picture's worth 1,000 words, of course. But like, I think sometimes CFOs are like, here, let me show you my model. And I look at
Yeah.
it and I glaze over. But if you can show me the trends by different dimensions, I can handle complex two-dimensional, it's dual axis graphs, but it just makes for communicating with other people who aren't accountants, being able to do data representation, data visualization, I think is a core skill of the modern CFO.
Yeah, and I would say 100%, and I would echo that and just say less is more, right? When you're presenting to the board.
Yeah.
Yeah, for
Yeah,
sure.
amen. You
Yeah,
you don't want to. I describe it as breaking into jail.
yeah,
You don't want to show something because you want to look smart, and then
yeah,
have them go, "Oh, well, let's dig here." And
yeah,
you're like, "Oh
yeah,
my god, here we go."
yeah.
You're
I think
opening up spreadsheets and you're trying to figure out where that number came from and why it's different. And
yeah,
yeah,
I think, and honestly, right, even if you're in a 3-4 hour board meeting, there is so much to cover. Um, and it's not just finance accounting, obviously that plays its role, but you know, you want to be able to hit the high points, talk about the things that, need talking about, but 90% of it can be just, to your point, presented in, graphs, from that standpoint, and not just throwing a whole bunch of numbers at everybody.
yeah, I think there's something you're just making me think of. Like, you almost want the finance section of the board meeting to be rote and you cruise through it
Yeah.
because you've closed the books in a reliable way. You provide, I always write up an end of month report in terms of what's happened across the business. We provide the slides ahead of time, which are
Yep.
the summary of the financial performance and the Excel file, what's going on with ARR. And so, like, I'll lead off of the board meeting and say, "Hey guys, we know these are the three things that are issues. We're going to dig into that on the operational side, but here's where we are with cash. Here we are against
Yep.
our debt covenants. Everything's good." And often the investors are like, "Yep, we agree." And I think that comes from one, my CFO being great, and working with the investor analyst to get to the set of slides that we agree are the way we're going to represent the business.
One
We're
hundred
giving them
percent.
information ahead of
Yep.
time. So then what you're not doing is spending all your time cutting through the P&L and the cash model. And instead maybe that could be frustrating for CFOs because, like, God, I spent so much time closing the books. I represented all this information, but
Yeah.
what you want to talk about is, hey, new bookings are slowing down. Like, why is that? Let's go in and talk about win rate and all the other things. So it's almost like you want that first part of the board meeting where you're going through financial results to be like low stress, and it's just, you kind of knock it out. You do it because you got to have the conversation as financial fiduciary responsibility,
Yeah.
but you don't want that to be the place where you end up spending the 3 hour board meeting.
No, and it should be, right, to your point, it should just be informative on where the business is today. And right, because if there's something amiss, right, assuming the financials have been unaccurately presented properly, whatever the issue is for losing customers or the bit or the revenue going down, or we've had these 5 customers that didn't renew, right, that's not a finance and accounting issue. That's a business issue that we need the board and the ELT or whoever's in there needs to be talking about. Well, how are we going to address this? What is the problem, and how do we fix this going forward?
Well, I think that's the net from our conversation, Chris, is this evolution of the CFO from a back office compliance officer to the strategic partner who makes board meetings go super
Yeah,
smooth.
yeah,
So with that, I always like to close these conversations with the speed round. Two components. One is your favorite metric and why. Second one, what's your favorite book and why? And so you're an accountant. Everyone wants to know, like, what is your favorite metric that you look at most? What is it and why?
yeah. I think for me, it's gross net retention and churn. I think if a client is keeping their customers and growing and they're not losing business, then that's a great business, especially if they're hitting those two really well. And hopefully they're on the other side of it. They're not losing customers; they're growing and adding customers as well from that standpoint. And over the course of just all the different companies I've worked with, and certainly in the SaaS industry, those two things always tend to hold true. They're not losing customers; they're typically always adding customers because they've got a great product and their customers love them. And so, you know, we kind of operate in the same realm from that standpoint. Customer referrals to other like-minded customers that can need that same product is how we grow our business, and you see that a lot in the SaaS world as well.
Yeah, as we were mentioning earlier, gross retention being such an important metric that contributes to your net ARR add. But I would say my experience, even in this last 2 years working with a PE oriented company, like the thing they're focused on, and it may be because stage appropriate, they're looking a little bit bigger than the early stage where you're primarily focused on bookings growth. They're looking at gross retention. And I
Yeah.
think for early stage founders, right, if you're a technology leader, you're out there, you're the evangelist, you're selling, you're closing the first deals, you're doing everything you can, customizing the product to make it work for those customers, and you get consumed with like bookings growth.
Yeah.
But when you hit that inflection point, $1 million, $2 million, that's where you got to be able to show, no. Product market fit isn't just about getting someone to buy you. It's about keeping someone with you because of the
Yeah.
dynamics with SaaS. You spend all this money to acquire customers. The payback comes in the lifetime value. So
That's
the
right.
gross retention shows that you have a business model that is working and will generate profits over time. I mean, that's why Salesforce does so well. Like most of their business comes from install base, predictable revenue. The
Yep.
percentage of new logos is actually relatively small compared to their total revenue. And I think that's what every SaaS CEO eventually realizes. It's about getting new customers for sure, but you don't want to have that leaky bucket. You want to secure and expand your current customer base as a primary area of focus.
Yeah. 100%.
All right, and then just last question: favorite book and why? Doesn't have to be a business book; could be a personal book. What do
Yeah.
you do?
Yeah, book reading is a leisure thing for me, so I'm not reading kind of business books and self help books. So I'm currently reading the Gray Man series, which a movie came out about based off the book a year or so ago. But it's basically like a secret ops uh, book where there's somebody that basically goes undercover and is working behind the scenes and in really remote areas and either trying to help somebody out or basically right a wrong from that situation. So I think there's like 15 books in the series, and I think I'm on like book 10 at this point. So
Oh,
moving
okay.
moving through it slowly. I've been reading them for about a year, but I haven't picked one up for the last couple of months. Work's been busy, but that's usually what I like to do, just to kind of switch off, and usually the last thing before I go to bed, if I have time, is read a little bit.
And so this special ops guy, he isn't an accountant, is he?
No, no, not at all. No,
I
I'm
thought I thought that was going to be the final piece. Was yeah, and he's an accountant. So
no. The one thing like what I like about the people I work with and the work that we do is none of us are really traditional accountants. We've all kind of got they're all extroverts and all kind of do some interesting things. I played tennis in the US at Murray State, and that's how I ended up in the US to begin with. And then I did Spartan racing for 2 or 3 years at a
oh
pretty high
yeah.
level through 2017 through 2020, right before COVID. And we got a lot of people that have kind of interesting backgrounds and done a lot of different interesting things. So we got a lot of great people, a lot of people have done a lot of different interesting things, and they're a fun group to work with.
Well, that's what it's. I talk about software being a people business. Clearly,
Yep.
accounting, CPA, and cash firms are people business as well, and that's what makes it worthwhile. Is showing up, working with people you like and who are interested and interesting.
Yep.
So well done, Chris. Congratulations on all your success. If people want to learn more and follow you, it's LinkedIn is the
Yep.
best way to track you down, and then LBMC if they're looking for additional services.
Yep. Absolutely.
Awesome. Thanks for your time.
Appreciate it. Thank you.